Morning, guys. It is December 22nd. And I know it's not a Tuesday or a Friday like I normally do, but I didn't want to go this week without getting one out to you. I missed one on Tuesday because I was traveling. And then, of course, Friday, I don't know that anybody's going to help me push this thing out. They're all probably off. So they're taking advantage of the little bit of opportunity I have right now. What you're going to see in my background here, I'm sitting at basically at the lodge, if you will, out at the Berry Hill Ranch in Central Texas. Good friend of mine, Tom Berry, and I meet at multiple different events. And a couple of years ago, we're sitting at a little barbecue place in Venice, California. Interesting enough, I believe it was Venice that they had a barbecue joint, but we're sitting there chatting, and we made this deal to get out here and get one of those black bucks, which you see over there over my shoulder, a real interesting looking one for my daughter. She was doing really, really awesome at the time in school, and I couldn't wait to get Maggie out here to do that. And then things turned around at school and it didn't work out so well. And then Corona happened and all these things delayed us. And this year, as you know, Maggie and I were heading out to go hunting in northern Arizona, and that particular hunt was a bust. That unit, which typically had a lot of public land, a lot of private land had been taken up, and a lot of closures, couldn't access any of the public land. So gave those tags back, came back here. We had a very successful hunt yesterday. Tom said it was probably more of the difficult animals to run down here on the ranch, but we were very successful because things just lined up perfectly in those opportunities. So Maggie got her black buck, which was awesome. I was able to get my hands on a red stag. So more meat for the freezer. It's not something we just throw just for the trophy. And of course, the trophy looks good too. But want to get you guys some information that probably matters more to you. When you get a chance, go to berryhillranch.com, check out what he's got going on there. If you're interested, get a hold of him. See if you can book something out here. It'd be a really good time for you and anybody else that you want to do this. And make sure you guys mesh. You don't want to be running around in an environment somebody you don't get along with. So be sure that you guys mesh well in that conversation before you take that trip and that long trek out here. So getting into the markets, interesting information that we saw out there. The single family rent report came out through CoreLogic this last week, and it showed that rents were up over 11% year over year. When you start digging into the depth, you're going to see a 9% increase in your multifamilies, like your rentals, that kind of stuff. But single families, your detached housing, saw a 12% increase. So we're seeing a higher demand for people to have a place to be, right? And I think, Corona did have a little bit to do with that when you start considering people are losing jobs. We talked about that way back. Actually, when I started this whole process of sending these videos out, when people were losing jobs and they're having to stay in their homes, we had this whole hunker down type of mandate that we were all dealing with. People didn't want to stay in a 2-bedroom, 1-bath apartment, right? You can't go outside, can't use the common areas. Who knows, but your neighbor may have lost their job. They're staying at home all day, drinking, beating their kids. It was not a great environment, right? So if you get into a place that had some space, a yard for your kids to run around and make things better. So that press, we can see for people wanting to find single family housing, started bringing that increase year over year for rents. But what we're also seeing is there's a lot of push out there from people on my side of the real estate side of the business. As far as the lending piece, you got the realtors out there. They're pushing people. You need to buy, not rent. It's a lot more. It's a lot better for you in the long term, especially when you're looking at cost. So we started seeing that, realtor.com is saying rents are up almost 20% year over year in this last November. And that national median rent going up to about $1,771. That's $300 a month increase from the previous year, according to realtor.com. We also see, we see others trying to reverse engineer that as a way to tell people, instead of renting, you should be buying. Well, if we look at let's take an interest rate of 3.25 for your owner occupied housing. When you look at that, with that $300 increase would equate to a $70,000 increase in buying power because of where the rates are. So that's something that you want to be cognizant of. What's going on out there with those who are encouraging people that are renters to start looking at buying, but buying's not going to be easy. Of course, we know the inventory's down. Inventory's harder to get your hands on. We're still trying to get our hands on materials. That being the case, you as the real estate investor, when you find opportunity, you take advantage of opportunity. Quit spending your time, as I say all the time, focusing on interest rates. Who gives a damn what's going on with the rates? With inflation doing what it's doing, especially with them trying to push in Washington more plans and more strategies to take more of the capital and put it out there for ambiguous crap, if you want to ask me. It's only going to push inflation higher. And that increased inflation is going to erode the dollar. Therefore, you're paying back that 30-year fixed with less money. You've got the calculator, you've got the tool. If you don't have that calculator, email me and we'll get you the tool so you can see exactly what's happening with your dollars being spent on those 30-year fixes. Now, let's take a look at the markets and see what's going on here. So we're going to look at the Fannie Mae 3.5, or the UMBS 3.5. This is just your universal mortgage-backed security. As you can see, we've come up off of our lows. So we're still staying in those low fours from what we've been locking a lot of. Now, that's all dependent upon your credit score, the loan to value, size of the loan, all those things have to factor into it. But when you look at that, that's encouraging for those of us that are doing your investment property loans, that those are coming off of those lows, and hopefully we'll continue to sustain the rates where we're at and maintain it for a longer period of time. But here's the one that I've been showing you that I'm a lot more concerned about. We're looking at the universal mortgage-backed security, what they call the 2.5 coupon or the 2.5% coupon. When you look at the history of this, all the way back to 2013, as we've been showing, here's that mark. Here's that 101.90 mark that's really concerning me as far as that price on that security. As you dig into that, when you start seeing where we are today, and we're going to zoom in on this, you start seeing right now we're at 102 is where we're sitting right now. So we hit that. You can see we went below it a couple of times this week where I wasn't watching because I've been traveling, and we came right back. That seems like a fairly strong support, but we've got this downward trend. As you can see from here to here, it's pushing, it's compressing it, it's forcing it to make a decision one way or the other. We're just bouncing off of that support. I hope we can hang on, because if we hang on to that, you can see what's going to end up happening. If we don't hang on, it drops, and it drops fast. When it drops, it puts pressure on the higher coupons. That pressure is going to force interest rates up. We know the Fed's going to taper. We know they're going to start pulling back on some things that they on their investment into the mortgage-backed securities and all other bonds. Rates are going to come up. They absolutely have to. There's no reason they're not up in today's environment with inflation up on everything else. Everything you go to buy right now costs more money. Why would interest rates not be? Because it's being manipulated. Since it's being manipulated, take advantage of that manipulation for the time being. Know that it's only going to benefit you to get that 30-year fixed loan, regardless of what the rates are right now. But take advantage of what you have. Don't waste your time chasing around. Get the deals done. Get them locked in. Focus on the close and go to the next one. I'll see you guys probably after Christmas.